So, today we're going to dig into a new tool that claims to solve a pretty massive problem for anyone who invests. It's a fascinating approach that combines the sheer power of AI with a really disciplined human designed structure. Let's see how it's supposed to work. If you're an investor, this feeling is probably all too familiar. You're just swimming in endless reports. You've got conflicting opinions coming from everywhere, and that nagging fear that you're missing something critical. It is completely overwhelming. So, how on earth do you cut through all that noise? And that really is the heart of the problem for investors today. You have access to more information than at any point in history, but you have less time than ever to actually process it. It's this constant, frustrating trade-off. I mean, look at this comparison. On one side, you got the old way, right? Hours, maybe even days of manual work, digging through spreadsheets and reports, knowing you could easily miss something important. On the other side is the dream of AI, an instant, totally comprehensive analysis that covers every single base. This tool is trying to be the bridge between those two worlds. So, how do they do it? How do they build that bridge? Well, the idea here isn't to just, unleash a wild AI on a sea of data and hope for the best. It's all about guiding that powerful intelligence with a predefined, human-made structure. And this is the tool we're talking about, the Finmagine AI Investment Advisor. Think of it as a guided system. It takes these incredibly powerful AI platforms we all know, like ChatGPT or Perplexity, and it gives them guardrails. It forces the AI to think and analyze inside a very specific structured box built just for investors. The whole concept really boils down to this simple equation. See, pure AI, left to its own devices, can kind of go off the rails. It can be unfocused, it can even make stuff up. And a rigid human framework, done manually, is just way too slow. The theory here is that when you combine them, you get the best of both worlds, the incredible speed of AI, but guided by the discipline of a proven methodology. And this approach promises some really key advantages. First up, consistency. Every single analysis is forced to use the exact same 21 criteria. Then there's completeness, because the AI can scan for everything and make sure no stone is unturned. Of course, the speed is an absolute game changer. And finally, you get objectivity. It forces the analysis to stick to the data, which helps strip out that emotional bias that can trip us all up. Okay, that all sounds great in theory, but how does it actually work? Like, if you were to use it, what does the process look like? Let's walk through it. It's broken down into 4 pretty straightforward steps. First, you decide what kind of investor you are. What's your risk tolerance? Then, you pick a pre-written question from their library. You literally just copy and paste that prompt into an AI you already use, and boom, you get back a detailed, structured analysis. Now, this right here, this is the secret sauce. This is that human framework we've been talking about. It's not some mysterious black box. The AI is specifically told to evaluate every single company across these 5 core areas, from balance sheet strength to innovation. This is what ensures that every analysis is not just fast, but also thorough and consistent. And that first step, choosing your profile, is really important. It's about defining what the system calls your investor DNA. It's all about figuring out who you are as an investor before you even start asking questions. Let's look at the profiles. So, if you're a conservative investor, your main goal is protecting your capital and getting a steady income. So the prompts are designed for that, asking the AI to hunt for things like stable, low-risk companies that pay a good dividend. Then you've got the moderate profile. This is for someone who wants that balance between growth and reasonable risk. So here, the prompts shift a bit, focusing on building a diversified portfolio for a longer time horizon, like 5 years. And finally, for the risk takers, there's the aggressive profile. This is all about hunting for maximum growth. The prompts here tell the AI to look for exciting stuff, like companies with high innovation scores or those that are expanding into new markets like crazy. All right, enough with the theory. Let's get practical and look at a real-world example to see what the output from this thing actually looks like. This was the exact prompt they used. Now, notice how specific it is. It names the company, it explicitly says to use the Finmagine framework, and it defines the investor profile and timeline. With AI, getting this level of detail in your question is absolutely critical to getting a useful answer back. And here it is, a snapshot of the result. You can see right away, this isn't just some generic paragraph about the company. For each category, like financial health, the AI pulls specific numbers, like return on equity, and then it assigns a score. It does the same for growth, for risk, for valuation. It gives you a key data point, compares it to the industry, and scores it. This is that guided analysis in action. It turns raw data into a clear, structured evaluation. And get this, according to the source, generating this entire detailed report, which, by the way, would normally take hours and hours of manual research, took less than 2 minutes. That speed is just a massive part of the whole value proposition. So if we take a step back, what does a tool like this really signal for the future of investment research? Where is all this heading? Well, what we're really seeing here is this powerful convergence. This isn't about AI replacing humans, it's about AI augmenting human intelligence. It's about using technology to execute a human-designed strategy with a speed and a scale that was pretty much unimaginable until very recently. Now, it is absolutely essential that we look at the disclaimers here. The source is very, very clear on this. This is a research tool to help you. It is not investment advice. The AI can make mistakes, and ultimately, your own human judgment is still essential. You are in the driver's seat, and you are responsible for your own decisions. And all this leaves us with one big, provocative question. Tools like this are only getting more powerful and more accessible. Now, they might not be completely replacing human analysts tomorrow, but they are absolutely changing the job description. The question really isn't if AI will be part of your financial toolkit anymore, it's how are you going to use it?